points here, but it looks like we're actually going to have a nice week to tell you about as far as the numbers go. It's been a real seesaw, as you can see. Now, we're out of the red, but the market, if the Dow does close at 16,770 and change, you got a weekly gain for the Dow. We've got about 45 minutes to go here in the last hour of trading. And also, we've got the Fed meeting coming up next week. That could be a game changer for the markets. Let's bring in our floor show right now. We've got traders standing by at the New York Stock Exchange, the CME Group, and, of course, the NYMEX. Mark Newton is standing by on the floor of the New York Stock Exchange. You know, Mark, it is so interesting. In a week that we've had so much breaking news, geopolitical news, whether it's ISIS, whether it's Ottawa, whether it's Ebola, and here we are with the best week for the Dow potentially since December of 2013. Explain that to me.
Well, we've been incredibly resilient. I think a lot of people have been skeptical that we could move up this quickly. And what's interesting is that there are a couple different things to look at that suggest that the market probably does not continue to move up through the Fed. And one is that you're starting to see signs of small cap underperformance just in the last couple of days. This is important because right at the lows, small caps started to do much better. Now they're starting to stall out a bit. That's important. We have gotten overbought. The Dow's moved up over 600 points in 5 days, or about 4%. S&P over 100 points. So we are short-term overbought. The third is that you continue to see signs of defensive leadership, and that's really a concern. You want to see the market led by the financials, technology. These groups simply aren't participating to the extent that some of the other groups are. And so, none of the reasons that people were concerned about that the market fell, that being potentially Ebola, starting to become more acute, ISIS, geopolitical things on the rise, and really geopolitical or European growth concerns now spreading potentially to the U.S. All those things are still in place, and yet the market still has managed to rally out of that. So my thinking is volatility is here to stay. We should be choppy through the elections. If anything, I'm looking to sell into this.
Let me pick up on that and take that issue of volatility to Trent Wagner over at the CME. Trent, and volatility has been incredibly high, but again, there's a seesaw story there as well. If volatility continues, does that pressure the market, do you think?
Well, I think it's certainly going to make the markets choppier than what we've seen over the last couple of years. But, I think what we're seeing this week is we're seeing a shift in focus to earnings and data, which, believe it or not, we used to base price action on a few years ago. And the earnings and data have been very, very good. We have around 70% of companies reporting thus far have beat expectations. The Ebola concerns, I think, certainly had a lot to do with early last week's sell-off. Those concerns have been quelled to a large extent. You can take a look at the market's reaction today, even as a new case is diagnosed in New York. So, I think that's proof, at least as of right now, that we've sort of put that behind us. And I think more than anything, and a lot of people aren't talking about it, Fed member Bullard early last week essentially reiterated to the markets that, in essence, the Fed is going to be here if needed.
Well, maybe they're not,
I think
Trent.
That could be a precursor.
Well, let me stop you right there, because I want to ask you this question really quick here. Do you buy or sell going into the Fed meeting next week? You brought it up. What's your answer?
Yeah, no, it's a good question, and I would be a buyer. For what I was mentioning a moment ago, I think that what they're going to do next week, the theme that Bullard had last week, I think is going to be true of the communication next week, which, given the volatility that they've seen over the last couple of weeks, I believe that they are going to really err on the side of being more dovish with this communication than hawkish. Okay. I'm not saying they're going to get specific with, pushing back rates until 2016, but I think they're going to be very clear that, listen, if needed, if the issues in Europe start to spread over here, we will be here and ready to act.
Well, we need them to be there.
We need them to be there. I think that's the type of verbiage we're going to see.
Yeah, absolutely. Jeff Grossman down at the NYMEX.
Yeah.
Jeff, the same question to you. Commodities story here. Do you buy or sell going into that Fed meeting next week?
Personally, I would be a buyer. I think even if there's inaction, I still think the overall look will be the dollar, which I just happened to look at the chart before I came on. It looks very toppy to me. I think the dollar is going to back off a bit regardless of activity, and I don't think there's going to be much activity. And that, to me, is a little helpful to the oil and equity prices.
All right, Mark Newton, I got 5 seconds. Buy or sell going into the meeting?
Sell.
All right, well, there you go. All right, thank you, Mr. Bear. All right, guys, thank you very much. Appreciate it. All right, that meeting's